Hello, everybody. My name is Drew Dosick, and welcome back to Trading the Close. A few things to put on the calendar this week. Tomorrow morning, we've got retail sales coming out at 8:30 a.m., so that could be a market mover first thing in the morning. Then, in addition, we got the FOMC this week. FOMC results are going to come out on Wednesday. It's going to be at 2 o'clock, but really 2:30 at the press conference is really where all the meat and potatoes are going to be, as the FOMC is not anticipated to cut rates this week. And then lastly, most importantly, coming up next Monday on June 23rd, we have Investor Empowerment Day here at Verified Investing. We're going to be doing live trading. Go to our main page to find out more details. We're also going to have promos for all the educational courses that we do provide for each and every one of you. All right, guys. So let's jump into some data right now so that we can check into the charts and see what's going on today. Because today we had a nice up day in the markets. Dow Jones that you see right here up 0.89%, Nasdaq up 1.46%, S&P up 1.03%. U.S. oil is now down 4% on the day. Huge retreat back in oil. We'll get into the chart details here in a moment. Gold is pulling back ever so slightly, down 1.37%. And look at Bitcoin rocketing back up 2.84% above $108,000. So let's jump into the heat map. As with a nice green day, you can see a lot of green on the charts here. There's really not that much red. You're going to have to look close to really find it. Oracle is one of those. We're going to look at that chart here in a little bit. That chart has really exploded to the upside, should be due for a little bit more of a correction in the near term. But as you see here, Meta, Google, Microsoft, Nvidia, Apple, AVGO, Netflix, all doing great and pushing up higher throughout the day. And then you get over here with Tesla. Tesla's also pushing up. It was a little bit higher earlier in the day at around 2% in gains, now at 1.16. Into the S&P 500. And as you see here, we really haven't changed. Even though Friday's sell-off, there was a lot of fear in the markets with the conflict developing and ongoing still over in Iran and Israel, but it was just a little blurb here in the screen, and then we're right back up trading above this declining trend line. Notice, though, over here on the left side where we last traded above this trend line, we had 4 trading days above, and right now, that's looking like that's happening today. 4 trading days above. So do we follow that up with selling coming into tomorrow, or do we just push up a little higher? And if we push up higher, the next area of major resistance I show on the chart is at this inclining parallel channel right around 62 to 6,300 on the SPX. Into the Qs, not much new to report here. Very similar to the spiders. We have recovered quite nicely from Friday's sell-off, pushing back up into this consolidation zone that we're currently in. Next resistance, all-time highs at 540.81. Support, though, is quite a ways lower. Now, there could be bounces along the way, but support is quite a bit lower on the chart right here, 493.46. Into the SMH. And the SMH is a little bit more extended than the spiders and the Qs on the chart, but still, it's all the while doing quite fine. Back up with price consolidating in this area. Any bulls on the SMH would want to see price maintain in this range for about the next 2 to 3 trading days before a breakout higher. And if we do break higher, the semis typically lead the way. So be watching this chart. That will give us insight as to what to expect in the spiders in the Qs. Into the IWM. Now on Friday, you see we had price retreat back, pierce this level of support at 209.53. Today we have bounced back up. So that support area is now taken away. So that very well may be the only downtick on the IWM before moving higher. This is a significant breakout on the IWM above this declining trend line, changing the trend for future price movement with these small cap stocks. Now, if we do see any more selling pressure on IWM, the support will be on this declining trend line. However, this bounce may prevent that from happening. The support on the declining trend line is right around 203 down to $200, depending upon what time price does get into that trend line. Into Bitcoin. Now, Bitcoin, guys, this is a fascinating chart. We were looking like we were about to break down with a head and shoulders pattern right here. The breakdown only lasted 1 day, never confirmed. And guys, back to learning the confirmation signal, learning this education. Don't get caught on the wrong side of the trade. Take advantage of the upcoming Investor Empowerment Day on June 23rd. and capitalize on some education. There it is, the banner right down there on the bottom of the screen. If you don't click on it now, don't worry. We got more information on our main page. So go check that out when you have a chance. Now back into Bitcoin. So Bitcoin, if you've noticed and watched this show for some time, we've had this parallel channel that has been on the chart the entire time that I've been doing the show. And the reason is it gives us so much information. So let's jump in the 10-minute and I'll show you exactly what I'm talking about. Earlier today, price on Bitcoin rocketed up right past this 50% area on the parallel. But what did it do? It stopped and it paused for a little over an hour, gaining consolidation and momentum for a move up higher above this 50% area. So while this area was initially resistance coming back up, it fought to get through it and is pushed higher. So that means with Bitcoin, the next area of significant resistance is going to be up here at this trend line at $112,368. But you can also derive another minor resistance level strung together from this pivot high to the very next pivots. And we're coming up and approaching that quite quickly, right around $110,000 on Bitcoin. Into gold. Now, last week we discussed how gold did break out of this declining parallel channel, and there was a nice inverse head and shoulders pattern with a measured move up here at the top of the chart at $3,621.20. So today we're starting to retreat just slightly. Iran did mention that they were interested in negotiations. Not really sure how that's going to pan out, considering those rockets and missiles are still being fired on both sides. So with a little bit of peace talk, some gold buying pressure has alleviated and is starting to come down on the charts. All the while, this pattern is still valid for a break up. Major resistance, although, is going to be at the double top, right at $3,500. And the reason for that, if I want to remind you, is back to the double topping tail that we have on the weekly chart as well as on the daily chart, both of which are bearish signals for price action. So if price comes back up in here, you should expect significant resistance right around $3,500, unless, of course, we have any other geopolitical events that transpire, creating more turmoil and uncertainty. Into silver. This silver chart, guys, is quite fascinating. We've discussed this several times as we've broken out from this inverse head and shoulders pattern with a current measured move at $38.97. Any pullbacks down here to what was resistance is now support at $34.86. Could be a buying opportunity. However, I want to show too on a larger time frame, this area right down here, when price came down on silver in 2014, 2015, all the way up until COVID, there were tremendous buying opportunities here on the chart. You see what price did retreat back here in 2022, came back down and retested this area. If and when silver does ever pull back down into this sub $27 range, that would be the buying opportunity for actually someone buying physical silver to hold in their possession at their house. If you want to trade it, there will be areas of support before then, but that's just something to keep on the horizon, keep on your radar if you are interested in purchasing physical silver for the long haul. All right, into U.S. oil. Now, U.S. oil, we had a lot of information to go over now with this chart. We had a measured move of 68.69 with this inverse head and shoulders pattern. However, now on Thursday, we tagged that level. And then Friday, with the war concerns, price just rocketed up and ripped all the way through it. Back to the confirmation signal, guys. Did we close above this trend line? Yes. Did we confirm above this trend line? No. So what did price do? It's now reversed course, traded all the way back down as low as higher than Thursday's close before bouncing back up. Now it looks like it's going to close the day right under $70 on U.S. oil. So what you want to see here, though, for any bulls on oil, you want to see price get above this trend line and confirm itself. Today is basically canceling out this previous pierce above this level. You want to see price get above here, stay, and then move higher in a natural fashion. The one bad thing, though, that I do throw out there, we have rising oil costs, right? Our main concern with cutting rates with the FOMC, which I started the show out, was talking about cutting interest rates. And that if we do have higher oil costs, that's eventually going to trickle down to higher costs to the consumer, as most all of our products are shipped to the stores or to our houses, to whichever place that they are delivered for us to purchase and then obtain those products. So higher oil costs is going to also mean higher costs for goods, tag that on to the potential tariffs, we could be looking at some serious inflation if oil continues moving higher. So keep that on the radar there too. Into nat gas. Nat gas here has been bipolar, as I've described this before. We had a bull flag pattern that failed and dipped down. Now we started having bearish consolidation, all to just rip up higher today, right into this trend line. You can see that long-term trend line strung out from August 2nd of 2024 all the way through, connecting with this low pivot here on January 31st, 2025. So this trend line really is the line in the sand for natural gas moving forward over the next couple of days, and has been really for the last couple months of trading. If we get above this trend line and close and confirm above it, next stop $4.18. Otherwise, we could be looking at a lot of chop right around this area, coming from the extensions of the trend lines from the wedge pattern that we were focused on over the last several weeks. Into the 10-year yield. The 10-year yield really didn't do too much. Just wanted to report we are not above this declining trend line. Most importantly, we want to see that 10-year yield remain a little bit lower, allowing for the money borrowing to be in a little bit easier and lowest interest rates for those payments. Into the dollar. Now, the dollar here over the last Thursday, Friday, and today is now bouncing off of support trend line down here at the bottom of the screen. If I scroll that back, you can see I got that trend line from the pivot low in July of 2023 and connected it over to the most recent pivot low here in April 21st of this year. And so far, this area is collected the dollar decline. So basically, and it's not always the case, but when the dollar declines, the markets typically go up. So if we continue to have the dollar decline, we could be seeing asset values increase, but we'll have to watch this closely. And if the dollar starts ripping higher, that could actually mean the markets would start pulling down a little bit. So at this critical juncture here for dollar, do we maintain the support level? Do we break above this declining trend line that you notice is a very longer term declining trend line and quite steep too? So for a breakout to occur, it will have to break above and then confirm, but it likely won't retest this trend line since it is so steep. Also notice we've hit this trend line now once, twice, 3 times, 4 times. So this is now weakened this trend line, implying that a break above is more likely the next time price comes and attacks that trend line. Into SYM, Symbotic Inc. This company is involved with robotics, and it had a fantastic move today. You notice price, when it did break down underneath this trend, it's been fighting to get back up above this trend line, and finally today it did so. So first step accomplished. Second step would be to confirm above this trend line right here. But the bad story for Symbotic, it's got resistance not far away at this declining trend line at $33.35. So what you want to see, though, is a close above today's high in the following days. Then you'll likely start having some pullback into this inclining trend line right around 31.85. If it does pierce that level, 28.65 is the next area of support for a bounce up to break through this declining trend line and reach a target there at $37.41. Robotics are going to be a big mover in the future. We don't have that many robotics for consumers and retail investors, or actually retail consumers, to enjoy yet, but they will be a big game changer moving forward. It's all about which one, whether it's Tesla's, Symbotic, or a combination of these companies work out. But for a longer run, this could be a nice long-term play with this breakout move. Into AMD. Now, what a big move on this stock today. Look at the volume. Now, compare that over on the bottom of the chart. You can see we had a couple higher days here, and this one almost equated to it. However, this one is surpassing the volume and also breaking up above this longer-term horizontal trend line. Now, since this horizontal trend line has been drawn, we've come up, tried to get above it, failed, came up, got above it, then got rejected before confirming, and then now we're attempting to get above again today. Now, one big thing about AMD, there's a lot of analysts that are upgrading their price targets for it around $140. AMD also showcased over the past week AI hardware that is as a realistic alternative to NVIDIA chips. Now, we've been saying this for quite a while. NVIDIA basically has the dominance in the AI sector over the most breakthrough AI chips and the most high-tech and most advanced chips. when that goes away, because it eventually will, there's going to be a lot of other companies, and many already are producing several other AI chips. That's going to cut into the margin of NVIDIA, and it's also going to allow investors to start capitalizing on moves, much like on this stock, on AMD. Now, if AMD continues up, and if they truly do start producing chips that can equate out to NVIDIA's Blackwell, the newer AI chips, we're going to be seeing AMD move much higher on the charts. And the reason I say that, look over here to the left. We've had a previous high up above $200. We're currently trading over 40% lower on this chart. And you compare that to NVIDIA, NVIDIA is much higher on its chart. So AMD has a lot of room to run should they establish themselves. First steps, though, again, confirmed today with the breakout above this horizontal trend line. Then secondly, we've got this inclining trend line here that we need to get above. We can do both with one trading day tomorrow. We can close above yesterday's or today's candle, as well as close above this trend line tomorrow. So we'll see if price action does that. If so, first resistance 132.74, but it could be a quick pop up to 153.17. Into Roku. Roku also had some news today. They have an Amazon partnership with their ads demand side platform, their DSP, where media buyers go to purchase advertisement. So this is creating a whole nother outlet, and one with Amazon backing too can be a tremendous boost to the stock. So we noticed that price action closed on Friday down here in the low $74 range, and then today now is closing up at $82. But notice it's catching resistance on the short-term daily trend line right here on the charts. This still could be moving much higher on the charts for Roku, because again, this is opening up another huge channel for revenue for this company. The next major resistance I have for Roku is $93.72. It's kind of through a hidden trend line right through here, connecting pivot lows and connecting support right here. And it also tags the high end of the channel right on March 26th of this year. So then you can extend that trend line out, and you come to a point right here at $93.72, which will be ample resistance on the chart of Roku. With all this news of Amazon and partnerships with Amazon, I have to view the Amazon chart to see really what's going on over here. And really, Amazon had a nice day, up 1.89%, but it's really just been chopping in this fashion right here. The next resistance for Amazon is not that far away at this inclining trend line, roughly about $221. But the support area, since it's now established itself above this large time frame parallel channel, is at 204.17. Any pullback into this area would be a buying opportunity to then attack this inclining trend line. Last up, we've got Oracle. Oracle, as you see here on the chart, fantastic explosion move up higher. Usually these moves don't last that long, just because folks that are already involved in this stock decide to go ahead and start taking profits. All right. So, but there's a couple more reasons why this move likely isn't going to continue moving higher every single day moving on out. And I'll scroll back out. You can see this trend line that's on the charts. It originates from the pivot high in December of 2021 and connected over to the next major pivot high that occurred on November of 2024, and just string that trend line out. And you can notice that's where price is having a problem with Oracle to get through. Now, if you also notice, I've got this beautiful inclining parallel channel from pivot to then pivot right here. You notice here, price actually even hesitated here before busting up through into the parallel channel. That means eventually price likely with Oracle is going to come back down and test the bottom end of this parallel channel. Now that's a steep fall. We're talking $211 down to 180 and change. We'll be looking at roughly about 12% dip before Oracle likely will continue going higher. All really depends on price action around this yellow trend line. Will we get a pullback? The most immediate area of support, should price not fall to the lower half of this parallel, is going to be right here in the 50% area of this parallel channel, currently right around 205. So that could be a first nibbling entry point for a long, but then down here at the bottom end of the parallel would be the ideal entry place should you want to get a piece of Oracle. All right, guys, that wraps up trading the close. So excited to be back here in the office. Thank you guys so much for tuning in. I'll have some more videos, information for you tomorrow. Until then, you guys have a great rest of the day. Take care.